It is March 28th. It's a Thursday. This is the video log that takes 30,000 to a million. And after I take you through today's ups and downs, we're going to be talking about risk tolerance and how perhaps you can find your perfect balance. So, the day is virtually unchanged. I am now roughly at the same position I was at yesterday at 54,296. As you can see over here, it was basically the exact dollar amount yesterday at this time. So the big movers of today were EXK. The whole entire silver and gold sector was down quite a bit actually, but EXK lost $64, Apple 82 up, Spotify $26 up, and I still haven't been able to close that Spotify options trade. Hopefully it expires. Hopefully it expires worthless tomorrow, unless Spotify decides to go over $146. So that'll be $10 up from here in a day, which would be quite a massive move. So hopefully I'm lucky, and I get to collect $150 by risking 1,000. So $150 not bad. Wouldn't have had them. My account would have been down $150 had that not been the case. So I'm looking forward to tomorrow and getting some of that collateral back. Other big movers. Let's see. We have C-SPAN up again, $17. It's been a big mover for me. Over the week, as you can see, up 3.6%. What else do we have here? Wheat and precious metals was down $98. So I have 133 shares in that. I was thinking about selling a call option against it at 25 or 25 and a half, but I didn't do that. I should have done it. In retrospect, obviously, hindsight is 2020, but it is what it is. Other big movers, energy fuels was up $18 for me, and uranium business ETF down $28. And if you're interested in seeing this in percentages, we can click this button right here. We can look at the percent change. EXK down 6%, Spotify up 3%, C-SPAN up 0.7%, wheat and precious metals down almost 3%, silver mining, gold mining sector down like over 3% today. Very big losses. And URG was down 1.5%. Uranium ETF URA down 0.88. Be careful when you buy uranium ETF URA because it has a really high fee for maintenance. So you got to make sure you read the prospectus, guys, whenever you're purchasing any ETFs. Now, let's take a look. My options are still the same. I received some dividends, and I bought a couple shares of SH, which is the market short. This is my hedge to my portfolio, basically. Well, my entire portfolio's got, it's kind of hedgy, right? It's got a little bit of everything. Real estate, it's got Apple, Spotify and companies like that. Then I have silver and gold mining, and then I have uranium. So I have commodities, and I have emerging markets here, an emerging market fund. I even have a shipper. C-SPAN is a shipping company, and oil too, SXCP, and even the Russian market. So I'm pretty diversified. This is Asia Pacific fund, so pretty well diversified here. I should be able to survive if there's a major downturn, but we'll see what happens. I'm definitely not gaining anything right now, but the market's been kind of flat anyway. I'm sitting about even with the market for the week so far. It's definitely been an uneventful week. So, on to today's topic, which is risk tolerance. I suggest for any upcoming investor or trader to figure out what their risk tolerance is. So, the way I like to look at it is I like to work backwards. So, from the amount of money that you're willing to lose. For example, if you're not willing to lose any of your cash, well, let's just backtrack even more. First, there's risk in everything. So if you stay in cash, there's risk because you have inflation risk. So you can't just put your money in a checking account. It's going to slowly erode over time. You're asking for it. And there are no stronger currencies than the dollar and the euro at the moment. So you know, well, maybe yen or something like that. But oh, hold on 1 second. So, whoa. All right, that wasn't meant to happen. But we're back. We're back. I'm not gonna redo this video. No worth. So, all right, we're good. I think. Hopefully, yeah. So what was I talking about? So the major currencies are pretty strong, but the thing is they all have inflation. You're gonna lose a certain percentage of your holdings over time, and if you're just sitting in your bank account. So the two safest choices, in my opinion, is a time account, like a cash account, that pays 2 to 3% usually on your cash. Just park the money in there and take it out whenever you need it, and you can just accumulate a little bit of interest over time. Gold is pretty safe, right? The gold has stood the test of time for over 5,000 years. So it's still valuable. It's never going to lose value. So if you want something to last you till the end of your lifetime, gold's pretty good alternative option for locking value into something that later can be resold and unlocked. It's always going to have purchasing power, gold. Now, next safest options, like let's say you're not satisfied with that and you want to put like half of your money at risk or something like that. You got to figure out how much money you want to go riskier with. And so you still don't want to invest in stocks and businesses because they're overvalued, right? Every single business is overvalued if it's public. If it wasn't overvalued, then it'd be bought out either by private companies or other public companies. So if you don't want to buy overvalued companies, then maybe you want to invest in bonds. And so you can buy U.S. Treasuries, you can buy other country bonds, foreign emerging market bonds. You can buy developed market, bonds, and you can collect roughly the same interest actually as your cash account at the moment. The yields are pretty low, but you can still find some countries to finance. It's funny because you are actually financing these countries by buying their debt. You are their creditor, right? So they're working for you. Their tax money is paying you if you're buying bonds. Now, you can buy bonds, or you can start venturing into businesses. And if you don't want to invest in yourself, if you don't believe that you're a good businessman, you can invest in other people. That's why the public market is out there. And if you think there are other winners out there you want to invest in, that's great. But you want to figure it this way, right? With whatever portion you start investing with, figure out, imagine what it would be tomorrow if you wake up and your entire account is gone, right? If you invest, all of your stock investings is gone. How would you feel about that? Would that extremely change your lifestyle? Would that change your perspective, your future, whether you were planning on retiring or buying a house or something like that, or whatever you're planning on doing? How would that impact it? Would that be like a life-changing moment for you? So if it is, then you want to rethink your risk tolerance, right? Maybe perhaps you're not ready for it. If you decide to invest in bonds and like 20, 30, 50% of it is gone tomorrow, how are you going to deal with that? Are you going to be all right with that? So a lot of people have a mix of assets that they want to purchase and keep that percentage throughout their lifestyle until the risk tolerance eventually even changes. Like that's pretty much a typical financial advisor type of conversation that people have with clients, is about risk tolerance. And I urge you guys, before you start pumping a bunch of money into investment accounts or for trading, it's like, how much are you willing to lose? Because especially if you're trading, especially short-term trading, like anywhere from 0 to 3 months, you have a high chance of losing this money. Especially if you're starting out now, you have an extremely high chance of losing all that money, like all of it, like literally all of it. Because you're gonna you're gonna win some cash, you're gonna double down, and you might win again, and then double down, and then lose all of it. All right, So there's plenty of examples out there of people that do that, without understanding and how to manage risk and what that means, and without understanding their own risk tolerance. So, right now, if I lose this entire portfolio, like I'll be fine. Well, I know I won't, right? Unless something happens, like um, a solar flare hits and the internet goes out, and banks, like, I don't know, disappear. Some crazy stuff. If some crazy stuff happens in on the planet, then yeah, okay. But if it doesn't, then all of this is going to be intact, right? I have so many companies and hedges and instruments in there that they're going to offset each other. But anyway, if it does disappear, like, I will survive it. I'm not going to jump off a building or something like that, like a lot of people did in 2008. All their portfolios melted down to zero. They went from having it all to having nothing at all. And so they jumped off buildings, and it's a really big shame. But they were playing with fire. They were playing with stuff that they didn't think about beforehand. They weren't imagining themselves for the worst case scenario and see if they can actually mentally take it. So I really advise all of you guys. I'm not a financial advisor, by the way, and don't copy these trades. All right, do your own due diligence and research. Um, so I really advise to find your risk tolerance, find out what you're comfortable with, understand, like, the risk of how risky the bonds are, how risky cash accounts are, how risky is it sitting in cash, how risky is it sitting in gold, or buying the S&P 500 or individual stocks. Um, and then knowing that scale, figure out what you're comfortable with doing. So it's all about you being able to sleep at night, right? You gotta make sure that you check your greed with your fear, and you gotta also check your fear with your greed, right? Because if you're just sitting on money and you're saving in your checkings account or savings account that's giving you 0.05% per year, like, you're not gonna get wealthy, right? That's just reality. You gotta put that money to work somehow, whether or not through real estate investments, whether or not you decide to buy REITs, real estate investment trusts, and or ETFs, exchange traded funds of indexes, of stock indexes, of businesses, publicly traded businesses, or whatever you decide to do it. Make sure you do something, right? Start your own business. Open up a shop, a cafe, if you want to, if you're confident in your own business skills. But don't let it sit in your account. That's not how you're gonna get wealthy. It's not gonna happen. No one's gotten wealthy doing that. Maybe you work um, at a big company, and you know, but the way these guys get rich too is they have stock options and stocks, and they get paid in stocks, and they have stocks in their accounts, and they're forced to buy stocks, and that's how they get rich, is because of the stock appreciation after X amount of years. It's not that they just make like $500,000 per year and they just stuff it in their checkings account, and it just accumulates over to millions of dollars. They buy houses, houses appreciate. They don't. No rich person actually sits on their cash. And if you want to be a wealthy person, then don't sit on your cash. You got to do something with it. Sitting in cash is a guaranteed 2-3% of purchasing power loss per year. It's guaranteed, right? So take that safe, throw it away, or put some gold in it, all right, or some jewelry or something like that, but not cash. Don't be stuffing cash everywhere. All right, I think I've preached this point enough. Find your risk tolerance, research stuff, figure out how much you're willing to lose, and by all means, go all in on the stocks if you're ready for it. Start learning, and if you're learning to invest now and you're learning to trade, you're gonna probably make a lot of stupid mistakes. You're gonna start trading triple X funds. You're gonna dip your foot into options without realizing how to control your risk, or even realizing what your risk is, and so you're gonna lose a bunch of money. You're gonna invest in some penny stocks and not know that penny stocks um, don't really, are have a much less likelihood of making money, and they don't act like regular stocks where they go up over time like indexes. You're going to find out that a lot of stocks actually have a slow death towards bankruptcy, and they don't actually gain forever, um, which is actually all the stocks. All stocks are going to die one day. They're all going to stop. They're all going to end. They're all going to get bought out swallowed by a different company, or fizzle out because they get outcompeted. So you don't know these lessons when you're starting to invest and trade, right? You don't know that you're gonna lose a bunch of money on short-term trading and day trading. So it might take you 5, 10 years to learn and to make all these mistakes, and then you may actually start making money. But you know, the easiest way while you're learning is to just pick index funds and stuff them with cash, and make sure you do it in a Roth IRA account or through your 401k at work. And that's probably the safest way. But you need to educate yourself, because in today's world, it's very risky to be uneducated, right? You can't, the currency is not backed by anything, right? There's nothing besides paper that backs up any currency in the world. There's no gold that you can go and redeem in the bank for your money, right? It's not backed by anything. So you have to make sure that you understand the entire financial. It's like a requirement for our generations now, the millennials and the Gen Z coming up. It's a requirement for us to be. I guess I'm still millennial on the older side, but anyway, it's basically required. Like, we need to be financially educated, or we're gonna lose our shirts. All right, I think that's it. Peace out.